Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. The earnings season has been putting a cheer for the equity markets with the tech sector continuing to be in the limelight. In other news, it seems economists are taking Jerome Powell's words seriously as they seem to be adjusting their expectations of a rate cut in March, which has slowly been moving towards the second quarter. Even Goldman Sachs economists are expecting a cut in April end meeting now versus March meeting earlier. Good morning, JK. Seems like a sunny day for risk assets. How are you reading yesterday's moves?
Yeah, good morning, Swaraj. Yeah, it's looking much more positive for the Indian markets now. There is sentiment because it's not just the global macro, but also the domestic macros have been very positive. Yesterday's budget was received with both hands by the market, and particularly the bond market saw a very rare rally of 10 basis points, or rather yields falling by 10 basis points compared to the previous day, and trading at 7.04 multi-month low. And this was the offshoot of fiscal deficit, which has been achieved at 5.8% for FY24 as against 5.9% projected earlier, and also plan to keep deficit down at 5.1% for FY25, and which is not being doubted in the sense that high growth of India and the tax buoyancy will ensure that this can be it can be achieved definitely. And even the projection of revenue by the government at 12% is much lower than the actual number that is possible. So I think it's a very good news. It also leads to lower borrowings than expected by the government. And again, lower borrowing means that private players can be crowded in, and they can borrow at lower rates as well. Possibility that with a lower deficit, India's and high growth, India's rating can be really up for upgradation by global agencies. Of course, that we need to wait and see whether that will happen. But overall, very good news received well by the bond market, and stock market was marginally positive, but it was the banking sector which was taking the limelight, of course. So going forward, I think the infrastructure spending higher allocation at 11% is also very good, because that focus continues, leading to higher employment and higher growth. So overall, a very good macro event for India. Yes, the global fact. Yes, in the meantime, the Indian manufacturing PMI was also revised yesterday in January to 56.5. But it was much higher than December's figure of 54.9, and it was the strongest growth in factory sector since September, as both output and new orders were expanding. Now, the current theme of the market in global scenario is that central banks are on the way to cutting rates sooner or later, and that is reflected in the market's behavior, irrespective of what Powell said about March rate cut, etc. And with this bias, markets have been looking at data which goes in line with their narrative and ignore what is contrary. Yesterday, weekly jobless claims and the challenge job cuts were all soft, indicating a soft jobs market. Job cuts, in fact, were the highest in last 10 months. And at the same time, the ISM manufacturing PMI, which came strongest since October 22, was ignored. And prices paid were higher, and new orders also improved. Market was actually, buying more into bonds. A couple of reasons for this fall in bond yields, which is like almost 30 basis points in the 2-year and 35 basis points in 10 and 30-year. It's down to one medium-term expectation that eventually Fed will cut rates, and also fresh money flowing into the money market ETFs, which is also leading to buying in the bonds. Whether it will continue will depend a lot on today's jobs report from US. Many leading indicators to job data are softer, ADP lower, challenger job cuts higher, weekly jobless claims higher as well. Then we had also the quits rate, and JOLTS report also was lower, which means employees are holding on to their jobs. So all in all, it can be a soft report. More than all, yesterday's statement from Powell that if the job report or the employment situation worsens further, then an earlier rate cut is not ruled out. That's what the market is latching onto. So all eyes towards today's non-farm payroll report at 7 p.m. Stocks, of course, as you said, took heart from better numbers from three mega tech companies. The the Meta, Amazon, and the Apple. These are the in limelight. They help the markets to recover all of their losses of the previous day. Softer yields, is actually guiding the dollar also. Dollar fell short of its technical target, 104 plus, and actually topped out at 103.85. Now it's back down closer to 103. Euro touched 1.0780, one of the technical targets that I had in mind, and now it 1.0780 was touched, and now it is heading towards 1.09 once again. I think today's jobs report will give a further direction, but the bias for the dollar also seems to be one of softness, as evident in the dollar yen, which is not now clinging closer to 146, and also the gold, which is now settling about 2050 gradually. On the rupee, too many positives, and I don't think it was a good case for central banks to hold back the rupee because the flows were good, and so rupee broke below 83 on a sustainable basis, traded as low as 82.93. And I mean, given the current factors and the flows, rupee can easily touch 82.75 also in the coming sessions. Of course, if there is a larger fall in the dollar index post today's data, we can even see 80 to 50. That is not ruled out, but we take one step at a time. Only mitigating factor, or rather the only factor that can stop the rupee from gaining much, is the Chinese yuan, which is still trading near about its multi-month lows. So let's see what is in store for us as we end the week on a very, very busy week, eagerly. Thank you.
Thank you, JK. Definitely this week was something for the risk assets to cheer about. Indian budget, it led to a good fall in the bond yields as fiscal consolidation continues. Lower fiscal deficit plus higher growth that can lead to some rating upgrades as well. Now, the current theme for global markets is about rate cuts, and of course, the labor market data will be quite crucial going forward, as that's what something Powell mentioned. So, US job market data yesterday was a little softer, and today we have the NFP, which is the final important data for this week. For rupee, there are quite a bit of positives. 82.75 would be a good target level. But on the other side, Chinese yuan continues to be on the weaker end. That's it from us today. Thanks for listening. Tune in on Monday for the latest in the financial markets.